Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't have to, and today we are talking about why the SOFI stock price is surging right now, how their earnings report went, if our predictions were actually correct, and what is going to be the future price target of the SOFI stock to determine if it's a fantastic buying opportunity right now. For more SOFI stock videos, remember to go and smash that like button right now, subscribe if you are new, comment your thoughts down below about SOFI Technologies, and without further ado, let's jump right into today's video. So if you didn't know, SOFI Technologies recently had their earnings report, and this is a fintech company that offers an all-in-one inclusive comprehensive app that offers customers anything that they would need that is finance related. The current SOFI stock price trades for around $11.85 right now, which is pretty good because it has recently increased based off of the news for their earnings report. The low-end price target for SOFI Technologies, according to analysts, is actually around $14, and the average price prediction over the next 12 months for SOFI Technologies is $17.95. However, the high-end price prediction for the stock goes all the way up to $22 per share. So buying the SOFI stock price at around or below $10 per share is going to be ideal. However, according to analysts, anything below $12 may seem like a good buying opportunity if you're going to hold this long term. Right now, 11 analysts currently cover this stock, and 8 of these analysts say that SOFI Technologies is a strong buying opportunity right now, while 3 of them say to hold the stock, while none of these analysts say to sell the stock. So why has the SOFI stock price surged recently? Well, clearly it's due to their earnings report, which I have made a multitude of videos on, so let's see how our predictions actually stacked up against the recent earnings report. So in past videos, we highlighted how SOFI Technologies could bring in anywhere between $270 to $300 million. 270 on the bearish end and 300 million on the very bullish end. And SOFI Technologies actually ended up bringing in around $285.608 million, and this literally falls perfectly in the center of our 2 price targets for the bearish and bullish predictions for the revenues. However, for their earnings per share, we didn't really give a good estimate for this because they were supposed to bring in a negative EPS or a loss of around 12 cents per share, but the company actually brought in a loss of 15 cents per share. However, despite this, investors are still very happy with SOFI's overall performance because the company delivered in total around $1.01 billion worth of revenue for the year of 2021. They had $30 million in adjusted EBITDA, which is earnings before interest, tax, depreciation, and amortization for 2021. And the company is also forecasted to bring in revenues in 2022 for the full year of $1.57 billion on top of $180 million of adjusted EBITDA, which is a huge increase. On top of that, they also added around 1.61 million new members in 2021, and they finished the year with around 3.46 million members in total. And the company still has approaching catalysts, so the stock price could continue to grow and appreciate over time. What's also really good is that in a previous video, I talked about how we would want to see their new products growing faster than their new members, and that's exactly what happens, particularly for the quarter. So in quarter 4 of 2021, they recorded around 523,000 new members, which is a sequential increase of around 39%. However, if we compare that to their new products, they added around 906,000 new products quarterly, which added up to around a 51% increase sequentially. So this means that their business model is working very well, and they are cross-selling as well as upselling their products to both existing members and new members. And this is overall going to bolster overall growth as well as revenues. So if I was a bear and I was shorting SOFI Technologies right now, I would definitely be worried because SOFI Technologies has a fantastic growth trajectory on top of good support from Wall Street with decent retail and institutional backing. So overall, this company is very solid on top of their management being extremely experienced in the fintech space. So for the earnings report, SOFI Technologies exceeded expectations in everything except their earnings per share, which came in at a loss of 15 cents per share instead of the forecasted 12-cent loss per share. However, their revenues are absolutely phenomenal, and the amount of members they gained was also fantastic news. So you can see see on screen here the metrics that they brought in for their member growth, their overall revenues, and their adjusted EBITDA. They also had fantastic 2022 financial projections, which should make existing investors very bullish on the overall company. So these are very positive developments overall. The CEO of SoFi even commented by saying this, and I quote, "We hit new highs across our key financial and operating metrics in the fourth quarter, finishing 2021 with record annual results." He goes on to say, "Adjusted net revenue of $280 million was another quarterly record for us, up 54% year over year and up sequentially even with the unexpected extension of the federal student loan payment moratorium in late December." And we'll talk more about that later in this video, which is going to be a phenomenal upcoming catalyst for the overall company. The CEO added, "We exceeded $1 billion in annual adjusted net revenues for the first time. We also delivered fourth quarter adjusted EBITDA of $5 million, our sixth consecutive positive quarter, resulting in positive full-year adjusted EBITDA of $30 million. The best part is that we were able to reach both our adjusted revenue and adjusted EBITDA milestones ahead of plan in an increasingly challenging operating environment while also significantly exceeding our member growth guidance." End quote. So this is very bullish news for SoFi as an entire company, and their growth prospects are absolutely phenomenal. So let's talk about what this means for the SoFi stock price and also what this means for their future growth trajectory. Well, first I want to start with their membership, because the addition of members is going to be what's driving everything. Their product offerings, their revenues, their earnings per share, their profitability, their EBITDA, and a lot of synonyms for these things. SoFi Technologies has been acquiring members like crazy. To put this into perspective, back in 2019, SoFi had around 976,000 members. However, in 2020, SoFi's membership grew by 875,000 members, which is almost a 90% increase to 1.85 million members. Then they increased their members again by 1.61 million members, which is around an 86% increase in 2021, and now they have around 3.46 million members in total. This is not counting their bank charter catalyst, the recent acquisition of Technisys, as well as how their Galileo platform is going to help them reach profitability. We also have great news, particularly their bank charter and their acquisition of Technisys is going to help them lower their overall costs and expenses. And if you can see the graphic on screen right now, we can see that their membership growth is absolutely phenomenal, increasing quarter over quarter and year over year at a absolutely phenomenal rate, which is why I personally am extremely bullish on SoFi Technologies, because this not only means that their products and technology is competitive in the fintech space, this actually means they are stealing market share from existing competitors, and that's exactly what I want to see. But SoFi Technologies is not only gaining additional members and that's increasing their revenues, their Galileo financial technologies platform is also acquiring new banks and clients, which is also bolstering their overall revenues. Galileo has increased their overall client accounts by around 67% year over year to roughly 100 million. On top of that, Galileo also has extremely impressive overall market share of the neobank space because they currently own around 90% of the entire market, and as we can see that the Galileo accounts are also increasing at a fantastic clip. This means that SoFi Technologies has become one of the most well-rounded, comprehensive, and thorough financial institution to date. According to recent metrics, they have around 1.08 million lending products and 4.09 million financial services products. This means that their lending products have increased year over year by around 18%, which is a pretty good increase. However, their financial services products have increased by a rate of around 155% year over year. And on screen, we can see both the graphs for those, and although this is a fantastic positive slope, look at the compounding CAGR or compounding annual growth rate for their financial services products, which is absolutely astounding. This lets investors know that their business model is working phenomenally, which to me makes SoFi Technologies a fantastic long-term buying opportunity, because as they continuously scale up their members and financial products, this is going to make SoFi Technologies a top contender. Also, I want to highlight that SoFi Technologies is very very intelligent because they are targeting the younger generation, specifically younger high earners. So as the younger generation graduates college, they refinance their loans with SoFi Technologies and they join the workforce, which will lead to many financial events in their overall lifetime, such as buying their own car and owning their first home, both of which SoFi Technologies can help them with. The CEO of SoFi has also been extremely impressed with their overall earnings before interest, tax, depreciation, and amortization, because he says that I've always been a believer that EBITDA is a better long-term measure of economic cash flow because there is a lot of non-cash charges below EBITDA. If you didn't know, the article defines adjusted EBITDA as the financial metric that indicates earnings before interest, tax, depreciation, and amortization. Adjusted EBITDA removes non-reoccurring, irregular, and one-time items that could distort earnings before interest, tax, depreciation, and amortization. Now, I personally like to judge companies based on a GAAP basis and not a non-GAAP basis. However, both metrics can tell you how healthy the overall company is, and right now SoFi Technologies looks to be a very healthy company. I also want to talk about approaching catalysts. So the first huge catalyst that is coming up for SoFi Technologies is the eventual end of the student loan payment moratorium, which is still currently in effect. And what this means is that right now, federal student loans are frozen and they're not accruing interest, which means people that owe student loans are not incentivized right now to refinance their student loans, and this used to be the bread and butter and the main revenue driver for SoFi Technologies. So that's a phenomenal upcoming catalyst. Another upcoming catalyst is that their adjusted EBITDA came in at around $30 million. However, next year, it's supposed to grow by 500%. Let me say that again. Their adjusted EBITDA in 2022 is anticipated to increase by around 500%. On top of their revenues next year growing by a rate of around 55%, which is absolutely phenomenal. If you can identify a company that has long-term growth over a 30% compounding annual growth rate for their revenues or EBITDA, that is a fantastic company that is rapidly growing. So SoFi fundamentally is absolutely phenomenal, and clearly their business model is working. SoFi Technologies is also currently working on growing their EBITDA margins from 3% all the way up to 11%, which is going to be very good for the overall company. Another catalyst for SoFi Technologies is their Technisys acquisition, and this allows SoFi to start transitioning their checking, savings, and credit cards to their Technisys technology platforms, which will not only save them around $75 to $85 million of cost savings from 2023 to 2025, it's also going to save them roughly $60 million to $70 million of cost savings each year after that. This is also set to increase their overall revenues by around $500 to $800 million from now until 2025 to 2026, which is more fantastic news. Galileo and Technisys, which are more of their back-end infrastructure platforms, have fantastic cross-pollination and synergistic opportunities between both of these companies. So not only is SoFi Technologies extremely efficient and effective on the front end, they also have fantastic back-end infrastructure. And this is something that traditional financial institutions cannot match. This gives SoFi Technologies an extreme competitive advantage in the overall market. SoFi Technologies, to me, is a very special company, and it's one of my highest conviction stocks. However, make no mistake, and the article even highlights this, anything can happen. We need to be wise about investing in high conviction plays. Make sure that you leave room to average down your average cost and not overexpose yourself too much to a single company, but right now, SoFi Technologies is growing at a very fantastic rate overall. However, I do want to lastly add that a catalyst that potentially could happen to SoFi Technologies is being acquired by a mainstream bank. Now, I personally am not betting on this because I like SoFi Technologies as they are right now, and to me, my personal stock price target for SoFi Technologies over the next 12 months is $20 per share. But I would love to hear your thoughts and your price targets for SoFi Technologies down below. Remember to go and smash that like button, subscribe if you are new, and I will see you in the next YT video.